Well, beloved Dub YouTube, this is going to be another video re-upload. So there's not too much to add on this one. It's going to be storage solutions for your Bitcoin and your crypto. Just going over some general news for the day. Bitcoin price action is same as always. It's sideways and down. I think it's everyone's calling for a little bit of a dumpy dump, and like I've been saying for a while now, I agree. It's looking weak. I think personally, I expect to see maybe $29,000 or $28,000. It's possible that it goes lower. I think personally, my 90% chance of this is the bottom is a $25,000 or $26,000 level. Obviously, everything's possible. It's possible it goes to 20, 19, 15. It's possible if it dips into the 20s. And I think after that, we might be seeing a recovery. Depending on the strength of the recovery, I may have to even amend my year-end projection. I've been saying for a long time, I think $250,000 by the end of the year is going to be the average price of Bitcoin. It's becoming increasingly unlikely that that is feasible without some sort of explosive movement. Of course, it is possible when Bitcoin really goes parabolic. It goes parabolic. And that's generally what you see with these blow-off tops at the end of bull markets, where it just goes way higher than everybody thinks, but then it blows off top, it just crashes all the way back down. And the more people talk about a lengthened cycle or some sort of lesser volatility cycle, I think I'm a believer that that's quite possible. I think if that is the case, then we might not see the traditional blow-off top price action, which means it probably won't go as parabolic either. So if I'm adjusting how I think the bear market is going to be, then I'm adjusting where I think the bull market's going to be, and I think 100K, 150K is still on the table, but $250,000, sadly, am adjusting my projection a little bit less likely. So with that being said, not much else going on. Like I said, I've been working on some crypto projects in my time off, and all of them have gone terribly, terribly wrong today. And I am just coming up against blow after blow here. So hopefully some of them start to turn around soon, because if they don't, I took a lot of time off for nothing, and that's no good. So here's the video.
Hey there, YouTube. Happy 6/28/21. It's about 6:15 p.m. at time of filming where I am, Eastern Standard, which I just realized I've been giving away somewhat of my location these past few videos. So good for you if you've been paying attention. Other than that, Bitcoin price action, still nothing exciting for me. People are calling for a recovery. It's right now bounced from a low of 30-ish on the 26th to 34,000 right now at time of filming, and it looks good. It looks better than it did, but I'm still not sold on a full recovery just yet. Technical analysis, fundamental analysis, all these things. Broad summary, I'm still not sold on a full recovery. I think it's going to take a little longer than people really want, and it's going to be a little bit more boring than people really want. But for me to even raise an eyebrow at something like a good recovery, I would want to see a daily close above $42,000, and then that would make me feel a whole lot better. So, just a quick tip before I get into the next part of the video. I know I tend to talk a little slowly because I need to think slowly about what I'm saying, and I'm just generally a slow dude. But YouTube tip, if you want to speed up the information that you're digesting from this channel and be able to listen to the whole video without spending a whole bunch of time, you can adjust the settings of playback speed on YouTube. So hit 2x and you'll spend half the time to get the same information. And I've done it, and I think I sound a little bit better on 2x, actually. I don't know why. Like, you know, everybody hates the sound of their own voice. So there you go. With that out of the way, thank you to everybody who's subscribed to the channel. Honestly, sincerely, I mean that to a lot of the friends that I've asked, been very supportive, and thank you to anyone from the crypto community that I've been supplying good dollars to. Anyone who just stumbled across the page. I'm almost at 60 subscribers right now. Still have the 100 good dollar giveaway ready to go if I hit 100 subscribers to one of the 100 subscribers. And I am still offering 25 good dollars to anyone who subscribes. And if you don't have a good dollar wallet, or you don't know what good dollar is, I did a video on it. You can check it out. And there are links in the description for referral codes for basically every service I use in crypto. And if you use any or all of them, we'll both get free crypto. And that's pretty cool because everybody wins that way. With that being said, I think still I'm going to keep these videos on the short side. This is going to be my video dealing with the one request I had. Guys, if you have a request, anything, everything, anything you want me to talk about, leave a comment. Let me know. I do have topics lined up and planned, but I would much rather actually engage with what people want from me versus what I just think might logically come next in a series of videos that 3 people are watching. So there was a request for me to go over different sorts of custody methods. And some people break it down a little bit more than I do. I kind of think it doesn't matter. There are really 2 things for custody, 2 classes, and it's self-custody or it's not. And the saying that you hear often is, it's not your keys, not your coin. Or not your keys, not your Bitcoin. And that basically means that just like everything else that the crypto community is trying to get away from or trying to leave behind in the old school system of how things are done is to be self-sovereign and to have actual control over the things that are actually yours. You know, if you have a bank account now, if you have property now, right now, you know, there are almost everything can be taken away from you by some sort of powerful entity. Usually people think of that as the government or whatnot. The reality is, you know, your bank accounts can be frozen. If you have a house and you want to flee the country, you're not taking the house with you. If you have gold buried in your backyard or under your mattress, not many people know this, but the U.S. government did make gold illegal very recently in history, in the 1900s. They just said, hey, look, we're going to make it illegal to own gold, so you need to give it to us. And by the way, we're not giving you what it's worth. We're giving you about a 20th of what it's worth. And that happened. There was like a small little exception for that law that they allowed people to keep gold jewelry. And so a lot of people ended up saying, all of this gold stuff is my jewelry. And, you know, it wasn't like there were stormtroopers kicking down doors looking for gold. But at the same time, if you want to be a law-abiding citizen and not worry about what kind of ramifications the U.S. government might impose when they make something illegal to own, then a lot of people, the reality is that a lot of people did turn in their gold. A lot of people a lot of people lost a lot of money, and it was just a law that was written in. So really, the important thing for Bitcoiners, people in this space, is you want to be self-sovereign. You want to have control over the things that you have control over. And when you have your Bitcoin keys self-custodied, and you don't have it in a location that anything else can access, the internet, other companies, people that break into your house, and it's secure. Even people memorize their seed phrase. I struggle with how detailed to make these things still. Generally speaking, when you store crypto, Bitcoin in a wallet, the seed phrase is the 12 to 24 words that give you access to those funds. Very broadly speaking, that's so that at any point you can even wipe one of your wallets, and if you have these words, you can restore it. And so people memorize these seed phrases, and you can cross borders with 24 words memorized, be stark naked, but bring all of your wealth with you, or all of your crypto wealth with you at least. And that's powerful. You might not be able to take your house with you, or certain things, but if you have self-custody of a wallet that you have these keys to, then you don't even have to shove anything up your butt. You can just go. And so that's pretty powerful. So again, broadly speaking, two things: self-custody or not self-custody. I'm going to go over not self-custody first, and briefly, because I think that is what most people do, to be honest with you. I understand that not everybody falls completely down the Bitcoin rabbit hole immediately like I did, and you don't just become a nutcase that obsesses about Bitcoin and you want to learn everything about it. You want to be in control about it, and you want to set yourself up for a future that who knows, might not ever come, but more and more seems like something that you want to be prepared for. It's like the doomsday prepper version for your financial situation. There are people who want to have food stored away for emergencies, water stored, flashlights charged with batteries. There's people who want to have their financials secured the same way. But so not when you're not self-custodying, a lot of people don't really need to learn about it. That's just easy peasy for them, pumpkin squeezy. And on top of that, a lot of services give you really good interest rates. Like I had mentioned, I had touched on before, BlockFi, Crypto.com, some of these other exchanges and multi-service platforms. They offer interest-bearing accounts, and they pay your interest in crypto, and that's really cool and really rewarding. And I'm going to be honest with you. Like I said, I have a lot of different storage solutions, and one of them is some interest-bearing accounts, because I feel comfortable spreading some crypto around and exposing myself to different risk levels within my tolerance, as long as I know that there is that risk. And I'm aware that at any given point, Uncle Sam could take out a pen and write all U.S. Citizens can't hold Bitcoin. All Bitcoin needs to be turned into the U.S. government, something like that, and BlockFi gets shut down. Coinbase gets shut down. Coinbase is a U.S. based company, so even if you're not earning interest and you have a Coinbase account and you just have some crypto sitting in there waiting for a sell order, or just sitting there, you bought it and you just don't know what else to do with it because you haven't taken the step to learn how to transfer Bitcoin out of an account. If it's sitting there, it's not yours. It's not in your custody. It's got your name attached to it, but very easily a company can refuse to give it to you for a variety of reasons. And I understand, like I said, it's a learning process. It's terrifying to send that first Bitcoin transfer. Once you bought it in Coinbase and you realize if I mess this up, this money is gone, right? And how many of us has sent a text message to the wrong person, right? That happens. It happens a lot, and it's very easy. It's something as simple as a text message. You choose the wrong name, something stored in your phone. You don't even have to type it in. You just choose the wrong thing, and that's wrong, right? Well, it's so easy to have this weird string of characters on a wallet address that makes no sense to the human, most human perceptions. It's just letters and numbers, and anything that can go wrong can go wrong. And if it does, then that is gone. An act of God could not bring that Bitcoin back. If you send it to the wrong address, it's burnt. And I get that. So a lot of people don't want to take that step to learning, to getting comfortable with that process. And so I understand why people don't take self-custody, and those are options. Interest-bearing accounts, things like that. With that being said, I think it also depends on your position size. If you have $200 worth of Bitcoin, good. Honestly, that's great. Like anything other than zero you're beating the rest of the crowd, right? But if you have $200 worth of Bitcoin, is it going to be worth it for you to go buy a $100 device for self-custody, like a hardware storage, which I'll go over later? No, probably not. I don't. The math doesn't add up. And would I be comfortable leaving $200 in like a Coinbase account? Like, yeah, I've done worse. So there's a lot of different things to take into consideration with how far down you want to go with your storage decisions. This already going longer than I wanted to, and I'm not touching on everything I want to touch on. I don't feel like I'm rambling horribly. I feel like I'm touching on some of the important things I want to touch on, but leave me comments, guys. How am I doing? I'm trying to make this not a horribly long video, and I'm trying to stay relatively engaging. So let me know. With that being said, there are a lot of self-custody choices that also have varying pros and cons. Just because it's self-custodied and it's your keys doesn't make it perfect, because when you self-custody something, you do take complete control over that, but you also take complete responsibility over what happens to it. Like I said, if you mess something up, you mess it up. You hear stories about people losing keys and millions of dollars 10 years later. That happens. You have to take responsibility to write down physically your seed phrase onto something that is not subject to wear and tear or exposure to the elements. Most people, again, it's really based on your position size. I had to spit that out. If you have $100 of Bitcoin, you don't need to get a metal engraving of your seed phrase. You can write it down on a piece of paper, but realize that that piece of paper is subject to fire, flood, smudges if you're doing it in pencil, whatever. And if something happens to those words, you don't have those words, you don't have your money. With that being said, again, I want to breeze over the self-custody now because it's pretty simple. You can have software wallets, which you can keep on devices like computers and cell phones, and I do not like these at all. I don't think your wallet should ever have exposure to the internet if it's something that you're just holding, right? That's different than something like, let's say you have let's say you want to have Bitcoin on the Lightning Network, which again, I haven't actually even ever talked about yet. Guys, let me know if you want me to do a video on the Lightning Network. But that is meant to be spent and, on stupid little small things like coffees or something like that. So like that, that is something you could have on your cell phone. There are web-based browser wallets like MetaMask, obviously, which is a wallet where you can keep crypto on your computer for access to exchanges like Uniswap, which is important if you want to do trading. Like, you're going to need to have money in a wallet like MetaMask, which is, like I said, it's a web-based wallet. Like, it's going to be on your computer with access to the internet, so it's subject to certain security risks. But I would just be aware that that is what the trade-off is, and adjust your position sizing accordingly to how much risk you want to expose yourself to. The best self-custody solution, I believe, is a hardware wallet that has no connection to the internet. It never touches a computer that has a real connection to the internet. You even air gap it from the internet, where like you keep it away from anything that might even have Bluetooth or anything that can connect to it. And some of the common solutions are Ledger wallets. Those are very popular. And Trezor. Actually, I've heard it pronounced different ways, so I'm not really entirely sure. It's Trezer, and some people say Trezor. Some people say Treasure. Maybe it's supposed to be Treasure. Maybe I even spelled it wrong. It's got a Z in there. But those are popular, and they have trade-offs as well. They're not just a hardware wallet, and so they reach the same. There's something. One is one is open source and one is closed source, and that means you can see the code that is used to secure the devices on one of them, and you can't on the other. And these have trade-offs as well. So an open source code, like, you can see that there's nothing malicious being buried in the code, and so can everybody else. So maybe they can exploit it if there's something to exploit. Generally, not too susceptible to stuff like that. They work pretty hard on keeping it locked down and finding the things pretty quickly. But closed source stuff has advantages too. They can push stuff out that you don't necessarily know what's going on behind the scenes, but makes things lickety split and pretty nice and secure, because no one's got access to what the code is to try to figure out a hack to it. So yeah, there's 20 minutes long already. I'm going to wrap it up now. I feel like I could actually still ramble on about stuff like multi-sig. Like, there's services like Casa, which offer some multi-signature. Multi-sig stands for multi-signature, so that, like, if you wanted access to your Bitcoin, you would need like a 2 of 3 multi-sig, where they have a signature, you have a signature, and there's a third one that, as long as you have 2 of the 3, you have access to your funds. And then some people will even like diversify. Anyways, okay, I'm rambling. Leave me a comment if you want to know about multi-sig. Leave me a comment if you've gotten to this point in the video 20 minutes later. Just leave me a comment. I'm trying, guys. So with that being said, I want to thank you again. I'm actually really enjoying making these videos because I don't know. It's just something. I enjoy crypto, and I enjoy educating people about crypto, and hopefully one of these days these videos are actually going to help somebody. If my videos have helped you, please let me know. That would make me feel really good. So with that being said, thank you.